Should you put your chips on SMH? A deep dive into the VanEck Semiconductor ETF. The rise of the digital age has made one thing abundantly clear: semiconductors are the lifeblood of modern technology. From smartphones to smart homes, from self-driving cars to cutting-edge medical devices, these tiny chips power the innovations that are shaping our world. And as the demand for these technologies continues to surge, so too does the potential for investments in the semiconductor industry. Enter the VanEck Semiconductor ETF, SMH, a popular exchange-traded fund that tracks the performance of a basket of leading semiconductor companies. But before you jump into this potentially lucrative pool, it's crucial to ask yourself, is SMH the right investment for you? This comprehensive QA guide delves deep into the world of SMH, exploring its key features, benefits, potential risks, and alternatives. Whether you're a seasoned investor or just starting your financial journey, this article will equip you with the knowledge you need to make an informed decision about adding SMH to your portfolio. What is SMH, and what does it track? SMH is an actively managed ETF launched by VanEck in 2009. It tracks the MVIS US listed Semiconductor 25 Index, MVSMHTR, which consists of 25 of the largest and most liquid US listed companies involved in the semiconductor industry. These companies encompass various segments of the industry, including 1. Integrated device manufacturers, IDMs, companies that design, manufacture, and sell finished semiconductor products, e.g., Intel, Broadcom. 2. Foundry semiconductor companies, companies that manufacture chips without designing them, e.g., Taiwan Semiconductor Manufacturing Company, TSMC, Samsung Foundry. 3. Semiconductor equipment companies, companies that develop and sell equipment used in chip production, e.g., Applied Materials, KLA Corporation. By investing in SMH, you gain instant exposure to a diversified portfolio of leading semiconductor players, effectively spreading your risk and leveraging the collective growth potential of the industry. What are the benefits of investing in SMH? Several advantages make SMH an attractive option for investors seeking exposure to the semiconductor sector. 1. Diversification. As mentioned earlier, SMH provides instant access to a diversified basket of industry leaders, minimizing your risk compared to focusing on individual companies. 2. Liquidity. SMH boasts high trading volume and tight spreads, making it easy to buy and sell shares without significant price impact. 3. Growth potential. The semiconductor industry is a crucial driver of technological advancements, and its growth trajectory is expected to remain strong in the foreseeable future. Investing in SMH allows you to capitalize on this promising trend. 4. Cost-effectiveness. Compared to actively picking individual stocks, SMH offers exposure to the sector with lower management fees, making it a cost-efficient option. 5. Convenience. Unlike individual stocks, SMH trades like a single security, simplifying portfolio management and reducing transaction costs. What are the potential risks associated with SMH? While SMH offers valuable benefits, it's essential to consider the following potential risks before investing here. 1. Volatility. The semiconductor industry is cyclical, meaning it experiences periods of significant growth followed by downturns. SMH's price will consequently fluctuate, potentially leading to short-term losses. 2. Concentration risk. Although diversified, SMH remains concentrated in a single sector, making it susceptible to broader market swings and industry-specific headwinds. 3. Geopolitical tensions. The semiconductor industry is heavily reliant on global supply chains and can be impacted by trade disputes, geopolitical conflicts, and other unforeseen events. 4. Technological disruption. The fast-paced nature of the industry could lead to new technologies or players disrupting established leaders, potentially affecting the performance of some companies held by SMH. Are there any alternatives to SMH? Yes, several alternative investments provide exposure to the semiconductor industry. 1. Actively pick individual stocks. You can directly invest in specific semiconductor companies you believe have high growth potential, but this requires in-depth research and carries higher risk. 2. Other semiconductor ETFs. Consider alternative ETFs like the iShares Semiconductor ETF SOXX or the SPDR SP Semiconductor ETF XSD for slightly different sector weightings and expense ratios. 3. Technology equity funds. Broader technology-focused mutual funds or ETFs may offer indirect exposure to semiconductors alongside other high-growth tech companies. How should I decide if SMH is right for me? The decision to invest in SMH depends on your individual risk tolerance, investment goals, and overall portfolio strategy. Here are some key considerations. 1. Investment horizon. If you have a long-term investment horizon and can stomach short-term market fluctuations, SMH's potential for growth in a critical industry can be attractive. However, if your goals require stability and capital preservation, the volatility of the semiconductor market might not be a good fit. 2. Risk tolerance. Assess your comfort level with volatility. While diversification mitigates risk, SMH's concentration in a single sector exposes it to larger swings than the broader market. If sudden drops make you uneasy, a more diversified option might be preferable. 3. Portfolio composition. Consider how SMH aligns with your existing portfolio. If you already hold significant technology investments, adding SMH may lead to excessive sector concentration. Conversely, if your portfolio lacks exposure to technology, SMH can offer valuable diversification and growth potential. 4. Investment goals. Align your investment objectives with SMH's characteristics. If your goal is long-term wealth creation, and you believe in the semiconductor industry's future, SMH can be a solid choice. However, if you seek short-term income or capital protection, alternative options might be more suitable. 5. Seek professional advice. Consult a financial advisor to discuss your individual circumstances and risk tolerance. They can help you assess the appropriateness of SMH within your overall financial plan and recommend complementary investments to achieve your goals. Beyond SMH, remember, SMH is only one path to gaining exposure to the semiconductor industry. Research alternative ETFs, mutual funds, or even individual stocks based on your specific investment preferences and risk profile. Final thoughts. Investing in SMH offers compelling benefits for those seeking to tap into the growth potential of the semiconductor industry. However, it's crucial to approach this investment with eyes wide open. By carefully considering your risk tolerance, investment goals, and portfolio composition, you can make an informed decision about whether SMH is the right chip for your portfolio puzzle. Remember, the ultimate decision rests with you. Conduct thorough research, weigh the potential risks and rewards, and seek professional guidance if needed. With a well-informed and thoughtful approach, you can leverage the power of SMH to potentially capitalize on the exciting world of semiconductors and fuel your path towards financial success.